In life, we have positive expectations. This isn't necessarily a bad thing, but when we bring that mindset into trading, it can be detrimental to our trading performance. Again, there's different aspects to it, and I'll break down kind of why being more neutral when it comes to looking at trading and the markets, it can be beneficial to how you execute on a day-to-day basis. Okay, on a day-to-day basis. Okay, let's go. So again, these are the different aspects of trading that I'm going to go into, and I'll touch on how having a positive uh, versus having a neutral mindset can essentially be detrimental to your trading performance, as I've mentioned. So let's dive into mindset. So when it comes to mindset and our overall mindset around trading and how things should work out, when we have a positive expectation, so we think that things are going to go in our way, in our favor. Yeah, that's what a positive expectation is. We go to the markets, we show up, and we believe that this trade that we're taking or the market today is going to move in our favor. However, when we have a more neutral mindset, we accept that outcomes are uncertain. So we may take this trade and we would like it to win. However, we are not blind to the fact that the trade can go against us at any time. So when we have this in mind, we're able to stick to our risk management rules and enter, exit, and do all these things that we need to. That's predefined because we understand that anything can happen at any time. However, when we have a positive expectation about this certain setup, we're less likely to stick to it, because why would we if it's going to move in our favor? Emotional state. We are likely to have increased confidence and motivation, and this can be a good thing, but when it leans to more the excessive side of the scale, that's when it can become detrimental. And when we're more neutral, we're emotionally stable and objective, so we're able to see the market for what it is showing to us, not what we would like it to show to us. And we're more poised when it comes to taking trades. We're more poised when we are taken out of trades. So if it's a win or loss, we're more poised and emotionally stable. Whereas if we do have that positive expectation, outcomes and outcomes and the way the market presents information to us is going to cause us to be a bit more emotionally volatile. And this isn't good for our trading, is it? So selectivity, and when I say selectivity, I mean so why do we get involved in trades, and what does our trade selection process look like? And our trade selection process looks more like, if we do come to the market with positive expectations, is we base trade ideas on bias and desired outcome. So if we have, let's say we show up for the day and we have a bullish bias for the day, and we're extremely optimistic about how the market's going to be bullish today, we're just going to act solely on that, and we're likely to only see information that's in line and congruent with that bias and desired outcome that we have for the day. However, when we move to a more neutral mindset and we have neutral expectations, we understand the market can go both ways, we're likely to get into trades and make decisions based on looking at things from multiple perspectives. So even if we do get into a trade, we understand, okay, at this point we might be invalidated, and if that does happen, we won't be as emotionally distraught because we've seen it beforehand. However, if we have positive expectations, we will only see the good side of the situation and completely not even look at the potential negative. It's not even a negative, but the opposite of what could happen in the situation. And I think you understand which one of the two, which would goodness gracious, which one of the two will provide us with the outcome over the long term that we would like. Risk management. So when we have a positive expectation, it's likely to lead to errors in risk. We're more likely to oversize. We're more likely to, let's say, move our stop losses and do all these detrimental things because we're optimistic about this one trade. And I've mentioned before, it's never about just the one trade, it's about a multitude of trades. And if we come to the market with positive expectations, we're likely to do things that's going to be congruent with our bias and outcomes, and these things in a moment can affect the way we see risk and handle risk. Whereas if we're neutral, we stick to predefined rules regardless of what the market is showing to us. So we can see the greatest setup that we've seen in our entire life, but because we have these predefined rules and we understand the outcomes are uncertain and we remain neutral, we see both sides of the situation. Even if it looks great, we understand things can go against us. We will stick to predefined rules regardless, and these catastrophic losses and catastrophic events that happen in our trading is less likely, and we're more likely to stay in the game and overall move towards that successful and profitable trader that we would like to be. Losses now. So let's dive into wins and losses. But let's first start with losses. So when it comes to losses, we're surprised and frustrated when it happens, when we come to the market with a positive with positive expectations. And the reason this is because that if something moves against our expectations, we're likely to feel unhappy about that. So if we, let's say, marked up the charts, we say, okay, yeah, I can win 3% on this trade, and the market then goes straight into drawdown and we get taken out straight away for 1% loss. Our expectations wasn't in line with that. Our expectations was, I'm going to win 3% today, and we might build stories in our mind. Okay, like, so once I've hit this 3%, I'm now going to be able to get a payout. Once I get a payout, I'm able to do that, and our expectations has completely been washed down by the waves, and this is likely to make us feel a bit uneasy. However, if we're neutral, losses are seen as probabilities. So that could be this scenario. The trade might have been a great trade, and in this scenario, you're surprised because you had expectations and didn't meet it. However, if you had a neutral state of mind, you've seen the loss as a normal part of probabilities, and you'd have seen it as, this is just part of my edge. I've got a 50% win rate, I've got a 65% win rate, I've got a whatever win rate, and that consists both wins and losses. So it's normal. This is normal. It fits my plan. Let's move on to the next trade. When it comes to wins, now this can lead to excessive confidence, and I've mentioned before that confidence is good. You need to be confident in order to be profitable. I believe that. However, when it leads to excessive confidence now, which is euphoria, where you don't look at risk and all these different things, that's where it goes downhill. And that's what wins can do if you have positive expectations. And why it could do that is because let's say you think you're right in this situation, so you forecasted something before this thing has played out. You said that price will move in this direction, and it has. Now you think you're right, you think you're a genius, whereas an individual who has a neutral state of mind, a more professional individual, someone who's a veteran in the markets, who's been in the market for a long time, will view this trade as expected outcome within a statistical edge. So they understand again that trading consists of both wins and losses, and this is just one side of the coin. And yeah, this essentially, this one trade doesn't matter. This one win doesn't matter. It's about sticking to the edge over and over and over again. And as long as they do that, they'll be good in the long run. Adaptability now. So we're likely to resist change in views if we do have a positive expectation and we bring that into the markets. So I keep on saying the same thing, but if we believe this one trade is going to win and price is showing, or you're not even going to win, but if you come to the day with a specific bias and we're so fixed on that bias, we're likely to not change our bias based on the information that the market is presenting to us. So let's say a bullish scenario, market's moving up and we get a strong drop and retracement back to the downside, because we've have that strong bias of how the market is likely to go up from the first piece of information that the market is showing to us. So this is essentially the anchoring bias. We're not likely to notice the second piece of information that the market's provided to us, which is that retracement, which may indicate that we're getting a shift in momentum. If we're neutral, we're likely to see what's happening in that situation. So we're likely to see that the market shifted and there's been a shift in momentum, and we're getting now downside activity. So from seeing that, we're likely to not get involved in the trade if we was planning to get involved in the trade, and see what the market presents to us. Yeah, hopefully this has been insightful. Hopefully you can see how having a neutral mindset over coming to the market with positive expectations can be beneficial to your trading performance and your decision making overall.